not that buying Lyft is going to generate revenue and profit, but that the street sees that and says, wait a minute,
Mhm.
so it's clearly going into that robo-taxi business now, and something like a move like that could double the stock.
Right. Hello, everyone. Welcome to Next Big Future. We have our good friend Warren Redlich here with us, and we're in the week just before October 10th, the Robotaxi day. We're going to talk about when we think Tesla's stock price really breaks out. Not like a little bit of breakout, not just like getting back to all-time highs, but really going beyond that. So, Warren, do you have something you want to talk about in that, or I can just pop out a few slides just to kind of give my perspective?
Well, I mean, just really short, the small breakouts are things like new smaller models or a new Model X or an extended Model Y or a van. Like, introduction of some vehicle that incrementally and maybe significantly increases revenue and gross profit, but isn't like crazy, right? If you and you put them all together, like more megapacks and a few other things like that, you could double Tesla
Mhm.
revenue, double profit. So that
Right,
it's not small, it's not nothing.
yeah,
It's just that's not going to get the share price to $1,000 a share.
right,
So
right.
then the big numbers are, to me, are robo-taxi networks generating, $50,000 in gross profit per car times 10 million cars, and you just get to insane numbers. And then robots generating $50,000 a year in revenue times 100 million robots, and you just and those numbers might be conservative. And
Mhm.
and those are the things that drive the share price to $1,000 a share, $5,000 a share, even $10,000 a share. And it's not next week.
Mhm.
But that, like I think Elon said he expects to hit 1 million units a year on Optimus in about 5 or 6 years.
Right.
So you're looking at 2030 to get 1 million units of Optimus a year. I actually
Mhm.
wonder if he's sandbagging on that one, but um,
So for me, 1 million Tesla bots a year, the way I look at it is that those would first be going into the Tesla factory. Tesla factories currently have 150,000 human employees. So if you put 1 million Tesla bots in there, then you can one they can handle all shifts. So if you have 50,000 humans per shift on 3 shifts, then 50,000 Tesla bots, if you had one-to-one replacement, could enable you to replace or double up if they're working with the humans into more factory production. So 1 million robots would be Tesla using them to maximum capacity in terms of like increasing car production and also other product production would potentially be a really huge thing where they could like increase their
well,
equivalent of employees. Yeah.
the way I heard Elon was the first manufactured generation will be in-house.
Mhm.
And that won't be 1 million units a year. My guess is that's 10,000 units a year for the first generation robot.
Mhm.
And I think we're going to see that robot on October 10th. I think he's, I think in the All-In pod or in the All-In, they had their event, the All-In
On
Summit,
Summit. On Summit.
and he mentioned, I think he pretty much said that they are ready with the first generation production Optimus robot. He mentioned the hand. He mentioned, in 5 years we'll have the third generation, and there's 2 years, little less than 2 years between generations. So it seems obvious that the first generation Optimus production intent version is ready to go. And so my
Mhm.
guess is they'll make like 10,000 of that a year, and that will go in Tesla factories.
Mhm.
And I think what he was saying is the second generation robot will be sold to others,
Mhm.
but not. And then Karpathy, I don't know if you saw this talk. Karpathy was saying he doesn't think Optimus will be sold to regular consumers like you and me. I've been an advocate for a bot beta program, and
Right.
Karpathy thinks that's not going to happen. So, and Karpathy probably knows more about that than I do.
Right.
I
Right.
still I still want it to happen, but I'm betting on Karpathy over me on that. So then the third
Okay.
generation be a million. I don't see Tesla having the sales on the sales side. I don't think the demand side is enough to sustain the production that 1 million Optimuses would generate inside the factory. So I think, initially maybe they'll deploy 10,000 robots in their factories, and that's really less about manufacturing higher volume or lower costs of the products that they're making and more about getting Optimus, learning how to make Optimus better, how to manufacture Optimus better, how to train Optimus better. And then the second generation will be a bigger game changer. I think there was a recent post from McDonald's that mentioned 1010, and some of us thought, and we're
Mm,
probably wrong, that maybe McDonald's is going to partner with Tesla on something. And I have
mm,
long been an advocate for one of the most obvious use cases for Optimus is in a fast food restaurant.
mhm.
If you
Right.
have 10 employees and it's not that Optimus replaces any one employee, but it does enough work that you only need 9 employees. Let's assuming
Mhm,
you have 10 on a shift, which a lot of fast food restaurants don't have that many, but just because it's simple to talk about it that way.
mhm,
If one employee is making costs the employer, not makes, but cost the
mhm,
employer, including all the costs that the employee doesn't get paid,
mhm,
$20 an hour, and the bot works 2 shifts and basically does, 80 hours a week of work,
mhm,
replacing 80 hours a week of a regular human work, it
mhm,
ends up being like $80,000 in value
mhm.
generated by a robot that, ultimately would cost 10 or $20,000 to produce. And that's a year for, $80,000 a year for maybe 10 years.
Right.
So um, I think that that's not, I, my impression is that 1010 was a coincidence for McDonald's and they're just doing
Mhm.
some partnership with some YouTube streamer.
Yeah,
Um,
some YouTube streamers
Possible.
doing something. Yeah, yeah.
Yeah. Anyway, so I think that the path for Optimus to grow, I had been hoping it would be quicker, but I understand Elon's, playing the long game, and you
Mhm,
spend a year figuring out, you do the first version and you run with it, and then you figure out, okay, how can we make this better? And after a year of running with it, you've accumulated enough to say, okay, here's how we're going to make the next version. You spend 6 months
mhm.
engineering the next version, and you start making the next version.
Right.
And and then you do the same thing again. And he said the third iteration should be really good. And that's when they scaled to 1 million units a year. And I think, once it's useful,
Mhm,
the market is so large that
mhm.
you could see that making. That's why I think he's sandbagging. Like, why would you only make 1 million a year?
Right.
Uh,
Also, if you have low cost batteries and a low cost efficient inference chip, then
yeah,
you can just include that, for um, like if you have a petaflop inference chip and 3,000 watt or 2,000 watts of battery, whatever form factor it is, but that's just walking around, you're talking to it. You can have it do nothing. You can be armless, and it can just be something that acts instead of your laptop, instead of your cell phone. It is the thing that would be the AI center for you. So the
it could
inferencing
be
is where
it could be that when it doesn't have physical work to do, it's used as inference compute in a cloud, some sort of cloud inference compute setup.
right, right, and that
Assuming,
could be profitable and something that people just wouldn't just want. Depending on
yeah.
how the AI thing plays out. So let me quickly just give people a in terms of Tesla share price, in terms of what's going on with Tesla and in terms of finances. So here is the forecast. So we're in 2024 now, and 2023 there was 1.8 million cars, and then the analysts, the 30 some analysts, said that they expect a slight reduction to 1.78 million cars. The 30 financial analysts, Wall Street, project almost no growth in 2025, even though Elon and them have said we're going to use the extra capacity. So the China factory, the Austin, if you start making many cars than the current factories can make, you can make 3.5 million cars. And right now they're saying we're going to get only less, barely 10% growth next year out of the units, almost all of which will be Cybertruck. And then some 20%, less than 20% growth to the next year, 2026. And then finally, another 20, less than 20% growth, 2027. So this is the kind of growth that they're expecting. Almost nothing for Tesla for basically the next
But
3.5 years. Go ahead.
Tesla said they're going to be introducing new models
Mm-hmm.
on the existing manufacturing lines, including
Yes,
more affordable models.
right.
So, assuming they have more affordable models coming out that are less expensive than 3 and Y, those would sell in high volume. That
Right.
might cut into Model 3 and Model Y sales, but
Mm-hmm.
um,
So
I
currently, the
and
analysts
I
say they
think
don't
we're
believe
going to see
any.
I think we're going to
Yeah,
see at least 150,000 Cybertrucks in 2025.
right. So this is what the analysts are saying. So they're anticipating practically
Yeah.
nothing for this, and I don't think they're really projecting much in terms of energy either. So basically, no growth, 220K cars, whatever. Energy, we had a 9.4 gigawatt hour quarter last time. This time we had 6.9 gigawatt hours, not that much. So um, that is, if we had the 9.4 gigawatt hours, we'd have about $3 billion per quarter, $12 billion per year in revenue. And then if you have two laser factories, you're looking at 22 gigawatt, $22 billion per year. And then every $10 billion of extra revenue on the energy megapack side is equal to about 250,000 cars. I just made a discovery and did a couple of videos with Randy Kirk and the others on YouTube, Herbert, about how I discovered, based on a picture released from Grace Towel. I could show that later. Okay, I can show it now. So this is the Shanghai factory, 45% complete. It's actually 60% complete now. If you take some of these cars or trucks and things on the side and then scale out what this building is, it looks like it's on the range of 600 to 700 feet wide, 1,300 to 1,600 feet long. The difference, I can't nail down precisely because I don't know exactly what vehicles are there, and it's a bit grainy, so I can't get precise, but it's clearly bigger than the Lathrop factory, which is this Google Maps shows
Oh,
373 feet by 1,180 feet. So they basically can do double the production at least, and then with two extra buildings, which you don't know what they're for, um, which they have in the rendering. There's two other buildings there that they're gonna make. There's on the order of 1.2, 1.1 million square feet of building in the Shanghai Megawatt factory. So basically, come back to that. If I think that that means that the double to triple the production of energy, which is going to get us that $32 billion. And if you have a fast ramp next year, they get the factory done in January of next year, and then how fast do they ramp up production? Do they ramp up all lines? And then if you can ramp it all up and it's 80 gigawatt hours, then you're adding $20 billion here, the equivalent of 500,000 cars. So all the growth from now up until 2026 would be just the equivalent of just energy in terms of cars. Go ahead. Anything on that?
no, no,
No. Oh,
it's good.
so, and then again, this is the details of the per quarter energy stuff. So for Q4, the increase in 20,000 cars that we made deliveries, AJ
Q3
did
for
something else
Q3.
for Q3, and then reduction in energy production and what else is going on means that he's expecting us to have gross profit about $600 million, $100 million less than Q2, um, which basically, so the fluctuation between 440, 460 against 500, like only having small movement in the number of cars built um, does not get us to huge revenue and profit gains. Need to have this doubling and tripling of things on the energy side, or doubling of cars in order to really,
Wait,
really
wait, wait. You sell
get the growth.
20,000 more cars and auto revenue doesn't go up?
Right. That's what AJ says.
How
You
is it?
can go to the
Okay.
details of it. But basically automotive stayed flat. He says 19.879, 19.89 total revenue,
Okay,
because he's
I'm
expecting
gonna
like
go out on
$900
a limb
million
here
less
and
energy
say that
storage.
I think
Yeah.
this is wrong because the the there's a shift. Um, I think they're going to have sold about 13,000 Cybertrucks in Q3. I don't know if they're going to
Right.
break down the number that way. About a
Right.
thousand a week, maybe a little more than that. And
Mm,
Cybertruck is selling at an average selling price of well over $100,000.
right.
So it's selling at a higher average selling price than Model S and Model X, which is what's declining. I don't think Model 3 and Model Y declined. I think Model 3 and Model Y went up.
Right.
So in Model 3 and Model Y, their average selling price probably didn't change much. But in the other models component, the average selling price went up and the volume went up slightly.
Yeah.
So I would expect auto revenue to be, I don't know, about, you know, 5% higher than that. It's not a huge difference, but it's going to be
Yeah.
over 20. And
So
AJ probably
yeah,
did deep analysis than I did, but I think people are
yeah,
discounting the massive revenue. The cost of goods sold on Cybertruck is going to be high, so the gross profit
yeah.
on Cybertruck will be high, but
So
the revenue
a
should be
positive
higher.
boost with the fact that they on profit would be that they laid off 10-15% of the staff early in the year. It didn't show up in Q2 because of the severance. It would show up in Q3, but then we have financing and stuff like that. So there's a bunch of moving parts. Bottom line is not much movement in terms of revenue and earnings yet. So we just discussed megapacks. So if we get to the 32 gigawatts, I think that could happen by the end of next year. That could be a increase of $6 billion in profit for the year, and per quarter we could be getting like $12 billion. So it can move up to about um, in the range of 25-35% of overall revenue of the $100 billion they're making. It could become go from 12% up to 30%, another 20 billion. So it'll be a not
Right.
insignificant thing for Megapacks Energy. Um, and so FSD. So we have 1010 coming up, and October, the Tesla AI team said they would have version 13, 8, and it would have 3 times more miles from 12.55 per intervention, 6 times more. So total from the September October changes, 18 times more miles per
Okay,
intervention.
I got to disagree with
But
you on this.
yeah,
They were not clear
mm-hmm.
whether the 6x improvement in V13 was 6x over V12.5 or 6x improvement over whatever came before. So
True,
I
true.
want to believe it's 18x improvement, but I don't think they were clear.
Mm-hmm. Yeah. Still, any 3 times improvement is the distance from a new teenage driver to an experienced human driver. That the teenage drivers have triple the accidents of
Oh
those
yeah.
and a problem. So this 3x 6x movement is a huge leap. It's more than the distance between a new crappy driver that everyone knows is terrible to a good human driver. So these are substantial moves, and it's only over a few months. And the training clusters, the continued improvement, full feature complete will continue from that point on. So I would say we're in the description of a full feature complete, very good FSD that is probably 10, 20 times better than version 11. And version 11 is roughly where everyone else is,
Yeah,
according to.
I just want to hit on a point here. It's something related to what you said. People often compare FSD to, well, it doesn't drive as well as I do. And we let 16-year-olds get driver's licenses and drive
Right.
unsupervised. So
Mm-hmm.
my advice would be find a neighbor as a 16-year-old kid and say, hey, can I ride as a passenger? Can you have your kid drive? I just want to see how your kid drives. Can you just have your kid drive me somewhere?
Mm-hmm.
Um, and see how many times you want to intervene.
Yeah,
Mile.
it's a lot.
How many times would you have intervened per mile? And maybe do like a sample of like 10 different teenagers in your neighborhood,
Yeah.
right?
Mm-hmm.
And my bet is that your interventions per mile would be higher with a 16-year-old licensed driver or 17-year-old licensed driver than they would be
Yeah.
with FSD.
Yeah. I
With
just
version
had some,
12.
yeah, I've just been riding around with some 16, 17-year-old kids. And basically it's a nerve wracking experience. And
It's an
it's like, you want
intervention
it
every minute. You want
every
to
minute,
intervene
every
more
minute.
than once a minute.
Yeah. It's like, hey, you're too far over. You're too far over.
Yeah.
Yeah. Yeah. Yeah. It's, I think very similar to the weaker versions of this stuff. Okay. So then 1010 or shortly thereafter, months after, we could have these licensing deals. I think particularly in China, they can go fast. And then the attachment rate 50%. We have about just shy of 7 million cars on the road, 7 million Teslas on the road. And we have in the range of 500,000 FSD sold. We don't know the exact number, but we know at least 400,000 in the United States. So then if it gets to the point where it's much safer than the average human driver, then in theory, you could say, okay, half of the people might choose to use it. So then if you could get even we say, okay, no Robotaxi, no getting the person out of the car, but we get it so that over half the people say this is a fantastic experience, which a lot of the people who are driving Cybertruck, FSD, other people are saying, then you could have huge attachment rates, which would mean that every time you sell an FSD, you get the profit of a car, $8,000. $8,000 profit, make a car and sell it. $8,000 for selling FSD, and the software is almost all profit. If I get it,
Do you think that the attachment rate of 50% is I think that's overly optimistic. I think that a large share of people who are buying, like the highest volume vehicles are the standard range Model Y and maybe standard range Model 3. And these
Mhm,
are people who are paying $40,000 to $50,000 for a car.
mhm,
And you know, they don't see it. They
mhm,
don't see that they're like, look, I just need to get to work.
mhm.
And they're probably not thinking about having the car drive for them. And if you told them they had to pay $8,000 for it, they're probably going to say, that's nice, but I need my $8,000. I think that it's optimistic to think that 50% of car buyers are going to buy FSD. I don't
So
think there's,
the
I don't think
mhm.
it could be perfect, and I don't think they would buy it. I don't think you'd get 50%.
So the difference there is that people still have to pay for insurance, and Jeff Lutz went from I think 80, 85 on his driving score to turning it over to FSD and getting up to like a 99, even 100% score. So the FSD adoption rate, like if you have FSD insurance, oh, sorry, insurance, and you have a higher, you're below average driver, your insurance price could be pretty high. And then the number of people who want it for the convenience and the number of people who want it for lower insurance rate, that would lower the cost potentially more than
I get
$100 per
I
month
get you on
subscription.
the insurance side of it. The problem is that Tesla insurance is only offered in a limited number of states. It's not offered in Florida yet. I'm not sure if it's offered in Texas yet. In
Mm-hmm.
California, it's not really based on your driving it yet.
Mm-hmm.
And then more than half of Tesla sales are in other countries.
Mm-hmm.
So, and FSD is not, as far as I know, available in most of these other countries yet, and it'll take time to roll that out. And whether insurance companies other than Tesla Insurance will account for that, I don't know. So far, what we're seeing is insurance companies don't care.
Right.
So, is there a point where insurance shifts? Yeah, if insurance changed and you
Mm-hmm.
were going to save, $500 a year on your car insurance or $1,000 a year on your car insurance, yeah, that would shift a lot of people.
Right. Right.
Yeah.
So I think that can happen, will play into increased adoption. The other aspect of it is that it seems, according to Frida Dwan, who was an altimeter at Capital, um, so their $10 million fund, she went and tested all the vehicles in China for their self-driving. So she compared Tesla as well as the others, and she said they're way ahead. And she also said the Chinese consumer is super eager to drive any kind of driver assist system. And if you had one that was perfect, better than human driver, then the Chinese adoption could be very, very high. Um,
Sorry, just a really quick. I don't know what the price of FSD is in China. I know in Thailand it's less than $8,000. It's more like
right,
$5,000 or $6,000 for FSD, but of course it doesn't work here.
right, right,
FSD doesn't do anything. I mean, there's some self-driving features in Thailand, but FSD is not better than enhanced autopilot in Thailand.
right. So I think enhanced autopilot in China is about $69 a month. So if you have these kind of like low monthly subscriptions, and then you have enough value in terms of some savings on insurance, some savings on other things convenient, that a significant number, well beyond 10%,
Yeah, but
heading towards it.
$69 a month is way less than $8,000.
Yeah, way less than 10. So
That's not
I'm
going to add up to
assuming,
$8,000 over, that's
right,
going to take 10 years to add up to $8,000 or 12 years.
right,
So
right. At
I just think
$100,
I just think we have to be careful about a 50% attachment rate on $8,000. I think we're probably looking at a 25% attachment rate on $6,000.
okay,
Yeah.
okay, we can use that other number. So for my calculation here, I'm not assuming it was I'm assuming a mix of subscription and purchase. So then potentially, like if you had half, it'd be 5 million, 1.5 million new cars, 3 million, and this ends in 2025, and 3 million on the old fleet. But if you're saying 25%, then this would be 750,000 on new FSD cars, and then it would be 1.5 million on the fleet. It would be 25% of both. So cutting it from 25, 50%, 50% to 25%, you would have this number. Instead of $18 billion in profit, it would be $9 billion in profit, and potentially less if you're using it. So it would be
just to be clear, the licensing deals with other companies, American OEMs and I think European OEMs will take at least 2 years to adapt their hardware to be able to be ready to take FSD. I think that some of the Chinese companies will, they would adapt in 3 months.
Right.
If they were motivated, they'd figure it out in 3 months, but maybe 6
and
months.
The other thing would be that if Tesla has 3.5 million car capacity in their factories, then they could just make more Model 3s, more Model Ys, because those are the ones that are able to use FSD right away. So a robotaxi company like Apollo Go, Baidu's company in China, could say, I was going to buy 10,000, 50,000 vehicles from Toyota and slap in some NVIDIA chips in there and cameras to make it kind of self-driving. Now I say, screw that, I'm going to buy Tesla vehicles. Then they would just be buying Tesla vehicles on that.
Yeah.
So Tesla would then get FSD sales on 100% of those vehicles and make vehicle sales on that. So that would be a next year, 2026 kind of thing where more companies buy Tesla vehicles with FSD to do Robotaxi, because that would be the only vehicles that could do it until other vehicles are adapted. But like I said, $18 billion becomes $9 billion. 4680 batteries, ramping and problems can be done. So then we've had this long multi-year ramp to get up to the range of 20 gigawatt hours per quarter, per year. And we know there's 8 lines ready to go, and they've only been partially started in Austin. They had said 25 gigawatt hours per year for a fully ramped line. So once you, in the next few months, they could have fully ramped lines, and you have to copy them over and make all 8 lines go to that 25 gigawatt hours per year. Then you get 200 gigawatts. And I think there are lines also in in Berlin and some other places. So getting fairly rapidly to 16 fully ramped lines, maybe in 2026, you get a 400 gigawatt hours per year. So this enables a massive supply of batteries that can go for cars, semi-trucks, cyber trucks,
I wonder,
and megapacks.
I wonder if they're going to make 4680 in China. It seems obvious that they would make 4680 in China. It just seems like, of course, they're going to make 4680 in China. But it may be that lithium iron phosphate batteries supplied by CATL and BYD are sufficient for what they want to do, and they just don't need it. That may be the way they're thinking, because I'm a little surprised they didn't announce plans to make 4680 in China already. And I think it's just that, Chinese battery producers are so competitive, there's no point.
Right. And also there were some patents on the iron phosphate battery, which are coming off. They originally were invented in Canada, and then China did a bunch of work with them. In fact, they did a bunch of patents, but those patents are expiring. So Tesla and other companies can now make lithium, the iron phosphate batteries, which are cheaper. So that's unclear as to, but the economics now are getting close. A 4680 with the nickel is not that far off of the iron phosphate batteries. They can get into that range. But the main thing is they can make a lot more products with it. And also, when they do, they would take out some layer of profit of other places. If you have the credits and they still exist, $45 per kilowatt hour, then the 200 gigawatt hours going into US products would potentially be $9 billion per year in credits alone, and then whatever other profit you'd have. So 4680s at the 200 gigawatt hour level, if that can ramp 2025, 2026, would potentially be a really big boost to profits, equivalent to the profits of the whole company this year. And also more vehicles. So then if new vehicles are announced in 1010 or shortly thereafter, and they can use the 50% capacity that's unused in Tesla factories, that would be 1 million vehicles, let's say $30,000 per vehicle. That's $30 billion in revenue. So if it's 20% margin, then you're looking at $6 billion. If the Cybertruck gets ramped to 250,000 in 2025 at $80,000, the not foundation series, but the a high end, but not the lowest end vehicle they plan to make, that'd be 20 billion in revenue and potentially $6 billion in gross profit. So by the end of 2025, add all these things together, a lot of execution has to happen. Then we could be looking at $50 billion, most of which would be in the 4680s and the FSD potentially. And then the other two things are still substantial. But to combine,
just be clear on that. I don't think you're saying Tesla will have all this in the calendar year or the business year 2025, but they will be on pace for it at the end of 2025.
Right, on pace for the end of 2025, right. Run rate of 2020 and 2025. Yeah, that's possible. And
Okay.
also they have execution issues, things can get easily delayed quarter two, you know, things can happen, things enroll in 2026. But I think certainly by 2026, having all of this in place, having $50-60 billion in profit is well within the execution, means of what we're seeing here for the various things. And I think mainly the biggest profit point would be FSD in some form, and also the in terms of the stock price. It's when the street and everyone sees that this is happening, that this is definitely going to happen. The energy things, the 4680 lines are ramped, the Cybertruck production is up, the vehicle production is heading toward 2.5-3 million vehicles, because currently they're saying that's not going to happen in 2027, right?
Yeah.
So when they say, okay, no, we have growth that's coming, then they have to re-rate the stock. So then you have these step changes as it becomes apparent that execution is happening.
Okay.
But yeah, the FSD licensing deals, because that's easy to model, that they can say, okay, you signed up BYD. They make 3 million cars now. They're going to have 5 million, 10 million vehicles in 3 to 5 years. All those vehicles in 3 to 5 years will be using your FSD, right? Then they can just pencil that into, okay, I'll do FSD subscription for BYD, 10 million cars. Toyota does it, 10 million cars, 8 million cars. It's easy numbers to pop into a spreadsheet that would be relatively date certain. It would be like, okay, it's going to happen in 2028.
Well, I don't think BYD, you wouldn't have to pencil it in. They'll just start doing it.
Right.
Toyota, Volkswagen, GM, Ford, you can't count on them doing it. They can announce they're doing something. You can't count on them doing it. We've seen that again and again. They announce they're going to make all these EVs and then they don't make them. They've announced a partnership and then they don't follow through with it. So,
Right.
but if BYD decides to adopt FSD, it'll happen in a few months.
Right.
And they're the biggest player that matters because everyone else is going to die anyway.
Right. Right. But the just like when we had the surge from $120, $140 in share price up to just shy of 300, that move was mainly when we had Ford, GM, all the North American car companies saying, we will use your charging system, right? So that, even though the charging system stuff wasn't immediate revenue, it was basically a signal that the competition was surrendering on something that would become significant. So if they surrender on FSD, it would be FSD and the operating system of the vehicle, right? Because you wouldn't be able to probably just bolt on FSD without
I think that the adoption of the North American charging standard of OEM saying we're going to use Tesla superchargers punched a hole in the Tesla Tesla bear thesis that Tesla isn't special, that Tesla doesn't have special engineering, that Tesla doesn't know what they're doing. They've just been lucky, blah, blah, blah. And all of a sudden it's like, okay, now the major car manufacturers have all acknowledged that Tesla's really good at engineering. That just burst a hole in that anti-Tesla thesis. But it didn't put numbers onto revenue and profit. And I think it's really like, all right, megapack ramps, Lathrop Shanghai mega factory starts ramping, you start seeing numbers, you start seeing growth,
Mhm.
you start seeing, and the thing is, energy growth is inconsistent, so people don't know how to value that. Cybertruck growth, I think we're going to see pretty rapidly. And then, if they introduce other models, which will likely happen in Q1, I don't think it's going to happen on 1010. I don't think it's going to happen by the end of this year, but I think sometime next year we're going to see something.
Mhm.
And then people are talking about a refresh of the Model Y. Like, it's only 4 years old. It's the best-selling car in the world.
Mhm.
I'm not saying they won't do some updates because they update all their cars constantly, but
Mhm.
maybe they'll change the headlights and maybe they'll change the suspension. But if you're running at full steam and
Mhm.
you're selling every car you make and you're the best-selling car in the world, do you want to take your lines down for 3 months and then ramp for 6 months to get back up to the volumes you had because you came up with something? Because they did that with Model 3.
Mhm.
And I'm going to ask you this question. Sorry for going off a tangent here, but I don't think Model 3 sales have increased from before the refresh.
I
They're
think
about the
they
same.
I think they have increased some. And it also, I think the Model 3 was on a downward trend, like less competitive against the Xpeng and other vehicles and stuff like that. So I think
It
definitely in
wasn't.
China,
Yeah.
it helped. I think China it helped. And so I think they have about, I don't know, 10,000 per month, like an extra 100,000 vehicles per year from the refresh, in my
I don't think it's that much,
estimate.
but we'll see. I don't know how we won't know. I don't
Yeah,
think we have a way of knowing, but
right. And then you're correct in that it would be very good if they come out with a hatchback. It's some clear new models that are lower priced. I think hatchbacks are very popular cars in China and Europe, and they're smaller, that kind of thing. So having those kind of new vehicles where it's definitively lower price, definitively different use case, that hopefully that would then get the extra million or so sales that they would want to even have.
as long as it doesn't cut into Model 3 and Model Y sales, if it competes with itself, it doesn't help that much.
Right.
That's a
Right.
challenge. But I
Mhm.
don't think that's the case. I think that they mostly take sales from Toyota and other car companies.
Right. So in terms of the question of when does the stock really rip beyond all-time highs and all that kind of stuff, I think as these things unfold, starting October through next year, that when the it's impacting the dollars because okay, we got a new megapack factory ramping and happening in China, and they're pushing them out quickly and installing them quickly. Revenue recognition is quick. Then that's a huge deal. FSD, where Q1 it's saleable in China, and suddenly you have a flood of 500,000, new FSD sales in China, where they would pent up demand and they get the best version. That would be dollar revenues things coming in that would and visit licensing deals. So I think licensing deals and real significant FSD sales, and then the energy and 4680 and stuff, as those things start uh, coming in, there'd be surprise after surprise on the quarterly earnings, where instead of you know um, 2.5, 3 billion, whatever it is, we're adding a billion every a billion or two every quarter. Then we're doing it all the time. We're guiding better. If we actually start guiding and saying, okay, it's going to be we got 5 billion this quarter instead of 3 billion, and then next quarter be 7 billion. We'd be in the position of Nvidia, where they say, okay, we have this number and it's like double last year's, and we're projecting even more numbers this year. Then then the story changes. One goes from no growth to substantial growth because we saw at the beginning that they were saying um, only 30% growth in car sales up until 2027, right?
Yeah.
So practically nothing. So if something that changes, yeah.
Yeah, no, if we see increase in growth expectations and an increase in profitability, then obviously you see a big jump. But that's still, to me, that's like, okay, maybe that takes the share price to 400 or $500 a share. What the real breakout is, the first Robotaxi, right? They
Hmm.
demonstrate, my guess is in the Bay Area, they will do a Robotaxi trial, and they will probably have this is my theory, by the way. I don't know if we talked about this before. People are
Hmm.
calling for Tesla to have like a supervised rideshare network where Tesla owners um, basically become Uber drivers in a Tesla branded rideshare network. And I just don't think that makes sense. The Tesla owners are not a reliable supply of robotaxi drivers, but Tesla has ADAS operators, advanced driver assistance, safety drivers, or whatever. That there are people that they pay to drive. You'll see them. Drive. Chuck Cook will have pictures or videos of them
Hmm.
testing Chuck Cook's left turn on the latest software. So I
Hmm.
think there's in the ballpark of 1,000 of those drivers around the country. And I think they could locate 100 of them in San Francisco and
Hmm.
then run robo-taxi services 8 hours a day in San
Hmm.
Francisco, or maybe 16 hours a day or whatever. But
Hmm.
with human ADAS operators supervising FSD robo-taxis, and then people take rides and they sell rides, and that allows them to verify that it works.
Hmm.
Um, and then, those ADAS operators, they don't just drive the cars, they take extensive notes and submit those to the AI team, and that helps the AI team improve FSD better.
Hmm.
So if you're going to offer a robo-taxi network, there's details about how to pick passengers up and how to drop passengers off, and maybe other features of driving a taxi service that are different than just driving a car. So I think you probably see a few months of that, maybe 6 months of that, until they say, okay, we're expanding this. And, or, at some point they say, we're taking the supervisors out,
Hmm.
right? And that's the moment when you take the supervisors out and the cars drive themselves, and now you have a revenue line, you have a cost line, and you can say, okay, and it takes a couple quarters for Wall Street to figure it out, right?
Hmm.
Because they need to see the revenue, they need to see the profit, they need to see the growth.
Hmm.
But once it happens at all, some
Hmm.
investors are going to say, wait a minute, if they don't have to pay a driver, their cost per mile is like 20 cents and maybe 10.
Hmm.
And the price of the ride is like $2 a mile initially, because they're still going to be competing with Uber and Lyft, and they can't lower the price too much because then the demand will be too high. And you start doing the math. Well, okay, if they drive 100,000 miles a year and they're making over $1 a mile, that's $100,000 a mile per car.
Hmm.
And I
Right.
think that over time will compress,
Right.
but that's the numbers that I get to. And all of a sudden you see $500 billion a year in gross profit. And for context, you 10 million cars, $50,000 in gross profit a year per car. That's $500 billion a year in gross profit. For context, Tesla's gross profit the last 2 years has been about 20 billion. So
Hmm.
once sufficient number of Wall Street types, you know, non-Tesla nerd fans see those numbers,
Yeah.
that's when the stock breaks out. And
Hmm.
if you're talking about a 25x in gross profit, you're not talking about a doubling in the share price. You're
Hmm.
talking about a 5x or a 10x in the share price.
Hmm.
Right? That's the jump. And I don't think the jump happens in 2025. I think that
Hmm.
maybe they start an employee supervised rideshare network in 2025, but it doesn't generate the numbers yet for
Hmm.
most investors to catch on. It has to
Right.
be when they take the drivers out of the car.
Hmm.
When they take the drivers out of the car and it's operating successfully, and it operates in the Bay Area, and it expands to LA, and it expands to Florida and Texas, and
Hmm.
over time that will hit.
Hmm.
But I think you might see, once you have even the supervised rideshare network, you might see a doubling. And I don't know if we've talked about this before. I have the theory that Tesla is going to buy Lyft.
Hmm.
They could, Uber has a $150 billion market cap. Lyft has a $5 billion market cap. Tesla could buy Lyft for like $7-8 billion.
Hmm.
And not that buying Lyft is going to generate revenue and profit,
Hmm.
but that the street sees that and says, wait a minute,
Hmm. Right.
Tesla's clearly going into that robo-taxi business now, and something like a move like that could double the stock.
Right. Right.
Like if
And
people like,
also,
yeah,
yeah. And then there are the Lyft drivers and the Uber drivers overlap because some Lyft
oh
drivers
yeah,
are Uber drivers. So then you would have a number of experienced drivers to do your system, and
I
you
don't,
would then
I'm not suggesting that. I'm not
okay,
suggesting that Lyft drivers are all of a sudden going to drive Teslas.
okay,
Because the problem is that, of all the Ubers and Lyfts out there, probably 5% are Teslas. I don't know if it's
mhm,
5 or 10%.
mhm,
So could you say, hey, you're a Lyft driver, we just bought your company. If you want, here's a sweet deal to put drive a Tesla instead of your current car.
yeah,
Maybe that does work. And
mhm,
then they probably would identify who are the drivers that drive the most,
yeah,
right? Because some
mhm,
drivers are driving 3 hours a day and some drivers are driving 10 hours a day.
right,
And they take the ones that have a good record, like they got the 5-star drivers,
mhm,
right,
yeah,
who are driving 8+ hours a day, and they say, hey, we'll put you in a Model Y,
mhm.
right?
And then
And
FSD is less tiring to
hey,
drive it
the
and all that.
deal here's the deal. This is what you have to do. You have to let the car drive.
Yeah,
You have to supervise the car driving. We'll train you with that. Not
yeah,
that it requires a lot of training.
yeah,
Um, and we want you to do that. I think that could work.
mhm,
That could substantially increase the number of supervisors to build your rideshare network. But
mhm,
you're basically telling them, in a year or so, you're going to be out of a job,
right,
right?
right.
And you can go back, maybe you can keep the car, whatever. You can try doing rideshare yourself, but you're not going to be able to outcompete Robotaxi. So
But you could then transition to being like a vending machine owner, where you would have the
yeah,
vehicle and then be because you want to have. And they talked about still allowing small or other owners of
fleet
some
operators,
robotaxi
yeah.
vehicles. Yeah. So then you
Yeah,
can
so
give
I'm just
rides.
saying, that acquiring Lyft, I think there's a lot of potential value in acquiring Lyft
Right.
because you can't. I don't think Tesla can afford $200 billion to buy Uber, but they can
Mm,
afford $7 billion to buy Lyft. And I just think
right.
the street reaction would be, well, there's not a lot of downside
Mm,
in spending $7 billion in buying Lyft,
right.
right? There's not a lot of downside there, and the upside is huge. So I do think, um, not that Tesla's known for acquisitions, and they might just want to do it themselves, but I think there's a lot of valuable data in Lyft.
Right.
I think there's
Right.
where do customers like to be picked up? Where do customers like to be dropped off? Where are the
Mm,
rides most likely to be early in the morning? Where's the last ride likely to be at the end of the day?
mm,
They have a lot of valuable data like that. And then, if you want to do customer acquisition, right? There's some cost in getting people to sign up on your rideshare network. But if people already have the Lyft app on their phone, and then
mm,
they look at their Lyft app, and the first option is a Tesla Robotaxi,
right.
right? You just solved your customer acquisition problem. And, Lyft probably has, like, 20 million, 50 million customers, if not more.
Right. Right.
So I
So
think there's huge value in that.
yeah, I think that makes sense for them to do it. I also think that a supervised network at scale, and we discussed it, is in China. That because there's so many, Didi and which is the Uber of China, which is 3 times bigger than Uber, and then there's Apollo Go, 10, 20 other robotaxi companies that have the money to go pretty big into buying a lot of Tesla vehicles, and they're already authorized to drive in Chinese cities. And China says that you need to have, international robotaxi thing, you need to have remote supervision of it. So you can't go to no driver, no supervision because China's laws have not changed yet. So you'd be in this phase of, you know, prove us to us that this works. We'll let you try and prove it, but it's some number of months and maybe a year or more before they would let you remove the drivers anyhow. So you have to do this intermediate phase in China, which can be, I think, very profitable. And if you do it with partners, which I think China would require you do it with partners, they would want you to do it with the existing companies, that larger supervised phase may be a requirement for Tesla.
And just for people to understand, my view is that the Chinese market is probably larger in terms of obviously the number of people,
Mhm.
but the price of the ride will be significantly lower in China than it will be in America. So the profit per vehicle will be higher in America by a lot.
Right.
But I just know here in Thailand, I think China is probably closer to Thailand than it is to America in pricing. I take taxi rides. Like, you would not believe. I
Mhm.
occasionally take taxi rides for less than $2.
Mhm.
Like, I get off at a transit station and we're going to this mall over here. There's a mall called Icon Siam. And that we took a taxi ride there, and it was like 650 baht.
Hmm.
It was like a buck 50 for a
Hmm.
taxi ride.
Hmm.
And routinely I get taxi rides for $5, $6,
Hmm.
and I don't know if I've paid more than $10 for a taxi ride in Thailand. And I'm talking about like I think we paid $6 for a 6 mile, 20-minute ride. It's just like
Hmm.
in America that price is so much higher. So my guess is that in China there's still sufficient low cost driving labor
Hmm.
that the price of rides is not that much higher than here, and you're probably rarely paying more than $10 for a taxi ride. Where in America, Los Angeles, you're probably paying $30 for. I haven't ridden in an Uber in America. Well, I
Yeah,
haven't been
30,
in America for
$50
over a year.
rides. Yeah, yeah, like going from the airport and back, $60 to
$30
get
rides
to
are
the
common. $30
common.
rides are
Yeah,
common in America. Yeah.
yeah.
In
So,
Miami,
so
Los
yeah.
Angeles, and New York, it's common to pay $30 to $50 for a ride.
So our prediction then is that um, Tesla will be on the way with very large profit growth through 2025, and by the end of the year, it could be substantial without necessarily Robotaxi. But then, with some level of supervised network, it could be possible that a Lyft deal, some kind of like psychological, substantial re-rating of Tesla occurs, where they perceive it as being different. And then, but the pure robotaxi, it's really happening probably sometime in 2026 would be when you'd, okay, now we go to double all-time high, the $800,000 or more, would be roughly the time frame that you think might be a possible thing for Tesla shares.
Interesting. I just asked ChatGPT. It said in 2021, around 30% of Uber's new cars registered in the US were electric, with Tesla leading that segment. So it may be that I thought maybe it'd be like 5 or 10% of Uber or Lyft drivers would be driving Teslas, but maybe it's more like 20 or 30%, because that was 2021. So if you got, you know, 500,000 Lyft drivers, how many Lyft drivers are there? There's probably not that many.
There's 7 million Uber drivers, but they're not all in North America. They're around the world, although they're
Seven
in major
million Uber
cities.
drivers, really?
Yeah, I think 7 million Uber drivers.
Uber has around 5 million globally, with Lyft has 2 million in the US and Canada. Wow, Lyft has 2 million in the US and Canada. So if you had 10% of Lyft drivers, you'd have 200,000 guys ready to supervise Teslas.
Right.
Okay, like my whole outlook has just changed.
Okay.
I
Okay.
am now even more strongly on the theory that Tesla, when they're ready to deploy a supervised network, they buy Lyft and they get 200,000 Lyft drivers. They move 200,000 Lyft drivers into Teslas. And now
Mm-hmm.
you have a massive supervised network. And you basically tell them, hey, listen, this is going to be for about a year, and then you're going to be out of work.
Yeah. But you have
But you're going to be out
a
of work
car.
anyway. You're going to be out of
You
work
be,
anyway.
but you could be an owner operator of a robotaxi.
Well,
We can
you're
transfer.
going to make this money. You're going to make
Yeah.
this secure money for a year. We're going to pay you well for a year.
Yeah.
And, at the end of the year, you get the Tesla and you can run it as a robo-taxi,
Right.
right? You
That's a pretty good
work
deal.
out some
Yeah.
kind of deal like that.
Mm-hmm.
Or, they not for free, right? But
Right.
they earn the Tesla through
Right.
the end of the year, and then when the Robotaxi network goes live, you're going to make $50,000 a year running the thing on its own.
Right.
Um,
Right.
and those guys are probably prime candidates to buy it, build their own fleets, because they know
Right.
the system.
You know the business. You know the
Yeah.
business. Yeah. So I think we'll see in a week what actually happens on 10/10, because
Yeah.
there could be some pretty big announcements that hopefully will affect this. But I think that the really big breakout probably is 2026, but big things will happen all through
Yeah.
next year.
And the one thing we left out is, I don't think Tesla Optimus operating in Tesla factories is going to break out the stock.
Mhm.
I don't think the market will see that, because it's not a revenue line. It's not a cost of goods sold line. It may look, and it probably won't lower cost of goods sold meaningfully for Tesla in the first year.
One
But
thing that let's discuss this before we go is about what Tesla needs to do to communicate. And this is something that I think really needs to be an issue, because they say that they are a AI technology company,
AI
but
robotics company.
a robotics company, but their annual and quarterly reports and their earnings call do not have that ratio of like over 50% is AI, and that they need to include that into the presentation, and then they should adjust their questions from the analysts and from the retail to say, okay, 20% of the questions are on cars, 30% of the questions on cars, 30% on
Yeah,
energy,
they're
or
not going to do
20%
that.
energy.
They're not going to do that. No, no, but I just think when you look at Optimus, okay, they go in Tesla's factories. That's not going to move the stock. But if you go with what Elon said, if October 10th we see the first production ready Optimus,
Mm-hmm.
and then about 2 years later, so we're talking in 2026,
Mm-hmm.
we have the next, it's probably, mid 2026, probably a little less than 2 years. You see the next generation Optimus production version, and they start selling it to customers.
Mm-hmm.
So you're talking about by the end of 2026. Yeah, by the end of 2026, you would start to potentially see revenue lines.
Mm-hmm.
You would start you you're not going to have high volume. My guess is that they're going to, if they do 10,000 a year of the first generation, they do 100,000 a year of the next generation, they do a million a year of the third generation in 2028 or 29 or whatever. Um, I think you see um, a meaningful revenue line at the end of 2026, and that's another breakout moment.
Right.
When Wall Street sees there are customers buying this thing and they start to do the math on how much revenue that's going to generate,
Mm-hmm.
um, that's another breakout moment.
Yeah, so I
So,
think they only like last quarter started breaking out the energy in the end quarter volume thing. So like 2 days
right.
after the quarter closes, they say, okay, here's our press release, and we say we produced and delivered so many cars, and we installed so many gigawatt hours of energy. When they start changing those things to say, and we have FSD sales and subscriptions of these numbers, and then this is our projection going forward in the earnings call, then that is a in your face thing to the analyst saying, you cannot ignore this because we're breaking it out and telling you exactly what it is and projecting it forward. So then, just like AWS goes from a minority, Amazon Web Services goes from a minority of it, less than the e-commerce, to bigger. When they have pages of it in the decks saying, "Here's what it is. Here's what's going to grow," then any analyst of the stock cannot ignore it, right? It's like
Yeah.
here it is. Here's the major thing. So they need to Tesla needs to change to that to say, okay, here it is. Just like they gave the Tesla AI roadmap, saying here's what we're gonna do in September, here's what we're gonna do October, boom. If they say, okay, Tesla AI, here's what we're gonna do Q1 2025 or all through 2025, here's what we do 2026, then it's and we'll go hold to it. Then that becomes a predictable, can't be ignored situation.
All
So
right.
okay. Okay. Thank you, Warren,
Thanks,
and
Peter.
we'll talk to you next time, hopefully in a week or less when we have 1010.
Yeah, yeah. All right. Thanks.
Thank you.
Bye bye.
Bye bye.